Look at the market condition right now. All right, good morning. I don't know. Good morning, everyone. I don't know if you could see me, but it's Monday, currently at 10:15 in the mid-morning. Hope you can see me clear, but I'm gonna show you something though. Technically very precise, so look at this. So basically the market just went straight after going to the premium region. So there you go. A while ago I was just framing how the market would deliver its price, and I'm not quite sure as to when or as to what particular area would price trade up before going to the discount region. And this really shows the big or the huge contribution of checking the higher time frame down to the lower time frame. So let me show you. Initially, this order block that I have here is within an hourly time frame, but let me show you within 4-hour time frame, so we have a clear vision of this retracement that happened. So in a macro level, we saw a price retrace to the discount or premium area, and here we can see that price deliver up to this, and we know for a fact that this is a what we call fair value gap, this portion, this area, right? So there you go, just touch basically here. Pretty much it looks like to me this is a institutional order flow entry drill, so the price did not really cover the whole gap or the whole inefficiency. It just touched that and then go straight to the downside. And here in the 15-minute time frame, it shows us, there you go, so precise. All right, good morning. I don't know if you can hear me, but it's currently just 5 minutes before 5 in the morning, early morning. So just basically out of the building, so there's a lot of vehicle passing by. But anyway, currently, so I was just checking the EU, and I noticed that there is a fair value gap within the 4-hour time frame. So I'm expecting price to deliver on that imbalance in the market in relation to a 4-hour fair value gap as well within the dollar index. So I'll show you the screen probably. And that being said, I'm expecting the EU to trade higher again in relation to the dollar index. But anyway, so there is also another trade that I took earlier, so around Tuesday probably or Monday evening, but I'm not quite sure. I'll show you also. It's just a 1-to-1 risk reward trade, so I take a 1% profit, and I'm gonna close the day or the week if I don't see any high probability within this coming few days. I'm going to take or close this week with one winning trade in relation to the previous weeks that I have, where I ended up the week with losing trades. So just to sanity purposes, just wanted to make feel that at least the trade is work, or the strategy is working. It's just that I need to be more consistent and precise with every details of the trade. So I guess that's it. Hello, so it is Monday, so currently February 12th, 11:59 in the mid-morning. Currently I'm just trying to finalize my setup or my forecast for this week, and currently I'm looking at the euro dollar. So eventually let me show you the screen. So this is the hourly time frame, euro USD. So currently the price is just taken our high here. This is the most recent high from the last trading day, so Friday. So as you can see here, it looks like the market just like to grab this, or probably we can use this high here. So price just take the liquidity from here and then trying to move down to take this fair value gap here. So ideally what I'm looking here, or what I'm anticipating, is price go to retrace like this again, or take probably again this one, and then have a strong market shift. Okay, then trying to like grab this, or this market shift here, and then continue to, and then retrace quite a bit here before moving to the downside, targeting this. So I like to see this kind of formation here. So I'm pretty aware that this might not happen, obviously, and we can't really forecast how exactly the market would work. But if this materialized, this setup, I would definitely happy to take a short position, definitely with a 1-to-1 risk reward. So especially that we are currently ranging from this region, which is our premium region. So then definitely this is a strong, or a strong potential for a short position if this setup materialize.
But if you take two trades and they both lose, you took one at 10 lots, you lose. You take one at 5 lots, that's half of what you leveraged on your first trade, then lost. The next trade, you're taking 5 lots. If you lose on that one, you're done for the day. If you win on that second trade, regardless of what the win is, you're done for the fucking day. You do not trade in the PM session. Done. But Michael, shit! You don't fucking trade again. You won. Leave it there. There's other trading opportunities. Stop fucking thinking that one trade idea, that one particular trading session is the be all end all. That's your fucking career. You're trying to encapsulate your entire fucking lifetime career in that one trading day. The fuck is wrong with you? Stop thinking like that. That's what every neophyte retail losing fucking prick does. I'm telling you, because I did that same shit when I was 20 years old. Stop. You have to expand your expectations beyond that right now moment.
Okay, so good morning again, guys. So it's Monday at exactly 10:30 in the morning. So Monday, February 19th. Pretty much I'm gonna go with the last 2 trades that I have, or that I took from second week of February. So pretty much let me go dig deeper on it and give you some insights about it. Okay, so this is a 15-minute time frame. So again, Monday morning, or I'm sorry, Monday trading week or trading session. So this trade was taken within the New York session. So pretty much after I saw this and the price to trace back, taking this liquidity here. So, and then also we have this market shift structure. Let me make it a little clearer. And then that gives me a confidence. This candle slice through this market shift, that gives me a confidence that price will continue to the downside, taking this liquidity before going to the upside. And that is being assisted, or that is being confirmed by my last trading high and low. So as you can see, when the market tapped to this area, we pretty much are within the premium region. So there's a premium region here. So that makes additional confidence to me, or confidence to the market, that it will deliver. However, after the market sliced through this market structure, price started to go sideways at this particular area. So I did not hesitate actually to cancel the trade and bank some partial profit, so to at least secure my first trading or first entry for the weekend. Apart from that, it's also backed by the last week, or last month rather, where I ended up the January with the losing trade. Additional one is actually here. So pretty much this is taken within the 5-minute time frame. So usually I would trade within 5 minutes or 15 minutes, so I try to play within those time frame. And this is where this is the trade. So price did take in this liquidity, then move to the upside. So we have market shift, then price return to this fair value gap we have in a 15-minute time frame by this candle. So the moment I got tagged in, price really plummeted to the upside, or go bullish right away. However, when the market hit this particular area, this is, by the way, the price reaction after taking this order block here. So price did return to the downside, and taking the fair value gap that we have here. So trying to rebalance the market. And I, again, protecting my capital, cancel the trade and bank some partial profit on it. So pretty much this is 2 consecutive winning trade that I have Monday, Tuesday, last second week of February. Pretty much I'm happy with the result of that, in addition to what we have last month. So good afternoon. I'm supposed to end this video supposedly last Monday, but things happened. So I got sick for almost 4 days in a row, and wasn't able to go to work at the same time. So I stayed at home, to get some rest. And today I just done with my checkup with the doctor, and things are going pretty good so far. But I need to go back by after 5 days, so that would be Wednesday. So I have to go back Wednesday to get a follow-up checkup. So currently they need to see if the issue with my lower body would be resolved by the medicine that they recommended. So probably I'm gonna finish this video at home. So I'm gonna see you when I get home already, and finish the video so I could release it during the weekend. So you might be wondering why with the last two trades that I share with you, I'm not allowing the position to develop itself, but close it manually and take it as a partial profit and then leaving the market. Well, it's pretty much simple. I'm trying to preserve the account. As a trader, risk is definitely something we manage, and we know for a fact that risk is a potential loss of our capital in the market. So the larger is your risks, the larger the size of your losses or profit can be. So in other words, risk is a double-edged sword. Needless to say, having a tight risk management strategy is fundamental as a beginning trader, or I would say as a established trader. For me, it's the most important thing as a trader. Although often overlooked because of its simplicity, definitely. But the very predicament of a successful trader depends on how we manage the risks effectively. So this is something that we should not take lightly as a developing trader. In the word of forex, or in the world of trading and investment, you are, or we are definitely managing risks. So in no time we should be a professional risk manager. It is our entire job to manage risk in such a way as to minimize losses or simultaneously maximize your profit. So in essence, our entire job as a developing trader or as an established trader is to manage the risks at all costs. So it boils down on our ability to manage risk effectively. To give you an example as well, when the market handed over to you, or the profit is handed to you by the market, then take it. Don't be afraid that the opportunity will no longer be there. As I mentioned, market repeat itself. When and how, that's something we manage. That's why we have to be a professional risk manager. In that case, it would allow us to stay in the market, and when the market handed over or show us where it like to go down or it like to trade in, then we take that opportunity. So hopefully you guys find value with this video, and hopefully I could share more of this for your education as well. Well, don't forget to hit the mark button and subscribe. So let's create a genuine community once again, and enjoy your weekend.